Hello, everybody. Tim Knight here. I think that's the first recording of the year, if I'm not mistaken. Whoop-de-frickin-do, yeah. Anyway, I thought that I would take a moment to just talk about the market in general by way of indexes. Ever since Stevie Boy Mnuchin freaked out and unleashed the plunge protection team, the market has been steadily up. Out of the past 11 days, and this is the IWM we're looking at, we have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ups and one lonely down on the 3rd of January. So Steven certainly knows what he's doing. Our government, in spite of being shut down, still has the PPT hard at work, and equities have been zipping higher with, as I say, just one minor exception. So that's what I think 91-92% of the time. So let's look at the big picture, and these are in, I almost said no particular order, but they're in alphabetical order. Let's just thumb through them, and I want to share a few words about each one, so we can kind of step back from this. Oh, incidentally, before I forget, I did want to mention I talked about the super cool new moving average feature in slope charts, and I dedicated a entire post to it. But if you didn't see it, please check it out, because it's really neat for those of you who use slope charts. It was like in the middle of holiday, and so I think a lot of people might have missed it. But we've got this very spiffy new feature that you should check out if you use slope charts, or if you want to tinker with slope charts. It's really amazing, and we're going to be doing all kinds of new things this year. We've got so much on the docket, but great fun. Anyway, let me just clear those out. We can talk about indexes, like I said in the first place. Starting off with the Dow Jones Composite. Now, this has a couple of very interesting properties. First of all, here is the long-term trend line, and it is broken, B-R-O-K-E-N. It is not damaged, it is not dinged, it is not splintered, it is broken. And we are right back up to it. And so the traditional role of these, of course, is for support to change to resistance. So we should be feeling resistance roundabout now. Plus, we've got this very spiffy little horizontal line. And so this monster right here should be, and let me just underline in boldface, that should be the topping pattern. Now, if Stevie Boy and his minions keep pushing things higher, this gets messier and messier and messier, and I get sadder and sadder and sadder, because what should happen is a reversal, real soon now. I thought Thursday, today, we were going to start rocking in that direction. It certainly seemed that way. We start off nice and red, deeply red, but the Fed came in again, and not just one, but 3 chairs, Yellen, Bernanke, and what's-his-face, Powell, pulled the same stunt they did last Friday, which is to say, don't you worry, we're watching the market, and that's job one. And so the market really liked that and responded. So anyway, this we really, really need to start reversing soon, because we're starting to approach the meat of these topping patterns. The NASDAQ, that is CompQ, kind of the same situation. Broken trend line, mushed right up against the underside of it, and we've got a horizontal, which, it really belongs a little higher. There's a price gap right there that it should live. So that is at 7034.82. So once again, we're getting very, very close to where it should start reversing. When do we just throw up our arms and say, all hope is lost? I guess, God forbid, if we push above the most previous lower high, way up here, which was after the whole G20 trade truce thing. So there's still, the bulls still have room to roam without completely wrecking the bear market. But if you don't mind, it'd be better to reverse roundabout now. Changing gears a little bit, because as I said, this is just alphabetical. The Gold Bugs Index, looking weak, turning away from this horizontal. So I'm mildly bearish on precious metals, and more specifically the miners. Back to equities. Indu, and some of these, by way of the NASDAQ composite, we've kind of covered already, but same story. The NASDAQ has tacked on, gosh, how much is it at this point? 2,000, about 2,300 points since Boxing Day. And we're getting very close to this important line, very, very close. And then there's a price gap up here. NDX, not surprisingly, very, very similar to the CompQ. A little bit weaker overall. So the price gap is up here at 6724.04, and we're still below that broken trend line. So once again, could get a little more of a rise here. But I've got to express surprise that the strength continues, because, you know, the big hope for this week is the China trade talks. That was a complete nothing burger. I mean, absolute zilch. And yet things still keep going up because of this relief that Jerome Powell has assented to the will of his masters. What else? We got the S&P 100. Beautiful little chart here. You can see this this decade-long channel. Broken trend line. You're going to hear those two words a lot. And we are getting terribly close to this level at around 1160, where it really needs to turn away. Now, I've written about the Russell a lot lately for good reason. This Fibonacci retracement is just mesmerizing to me. 1442.60. We have exceeded that a small amount. Not the end of the world. These Fibonacci's rarely turn on a dime, but we're certainly in the thick of it right now. This is around the zone, this major retracement level, where it should turn away. Plus, again, the stocks are all the same kind of. March 2009 trend line right at the underside of that. How are we doing on time? Well, we're gobbling it up here. Maybe I'll skip a few. S&P 500. The line here is right along 2603.54. This, I suppose, we could inch that as high as this price gap here before things get too terribly worrisome. I'll leave it here for now and just keep my fingers crossed, and anything else I got two of that will turn south Friday. But listen, for the bears, the past 11 days have been marked by nothing but disappointment, so I'm not getting my hopes up too high. Transportation, another beautiful pattern. I mean, we're not lacking for gorgeous topping patterns, that's for sure. The real question is, how deeply do we push into those gorgeous topping patterns? 97.57.5 is the line on this one. And you know what? I'll just close with the VIX, because this is where we've seen the fear just fly out of the room. We have just plunged on this. I will inch it down again even more. We're back well back into the teens, having descended from the mid-30s. We actually got up to 36.20, and so we've lost about half of that, and are really down to a level now which I'm considering to be the lower level of a range that we should be in for the foreseeable future. All right, yeah, I'll just throw one more last one in. What the heck? XMI. This is the major market index. Now, interestingly, this one bounced off its trend line. So there's the long-term trend line, and it went all the way down, and beautiful bounce right off of it. And we have ascended, and we're getting right up to this price gap here, 2474.50. So we're sneaking right up on it now. So these are the kinds of levels that I think do have import. But I think I've painted a pretty decent picture of what I'm seeing and what I think are the relevant topping patterns. So that is it. Hope this is helpful. And as I said, we're starting to get the gas turned on slope charts again. So please do check out the that cool technical indicators feature. Lots more good stuff coming this year, believe me.